Are you trying to figure this one out, Ed? I mean, core was a bit hot, headline was a bit cool. Why do so many people have so much more confidence in a rate cut?
The fear was that the Fed's fear was going to come to fruition, that tariffs were going to start really showing up in the inflation data. So while inflation has ticked a little bit higher, it's not to the point where if the Fed's going to take a balanced view of looking at the labor market and the inflation data, that's going to prevent them from cutting in September. So that's I think that the message is that it wasn't as bad as feared. Economic data can be funny. It's a psychological game of is good news, or is good news bad news? In this case, it's a situation where not bad news was good enough.
Okay, not bad news was good enough. I'm going to remember that phrase. I'm going to reuse that, Ed. I'm not going to give you credit. Looking at that 96% chance on the CME FedWatch tool, what does that mean for the market? Does that mean that cyclical sectors, in your mind, have a lot more upside as opposed to defensive sectors? What does that mean for the tech trade, just this increased confidence?
So in general, if you look at times when the Fed had paused an easing cycle and then they restarted it, which is what this would be, the market has done pretty well. The S&P has risen over a 6-month window on average about 14%. We're not forecasting that big of a gain. That's a historical perspective. And cyclical sectors have tended to outperform. So the question is, which cyclical sectors are you talking about? Are you talking about cyclical value sectors like industrials, financials, energy, or are you talking more cyclical growth sectors like technology and communication services? I think the overall landscape favors cyclical growth sectors like technology. That's where the earnings growth is. That's where the top line sales growth is. And a lot of those bigger cap companies are probably better able to navigate this tariff environment. So that's where we would lean more towards cyclical growth.
What do you think about the overall investment environment? We just mentioned markets are trading at all-time highs, elevated valuations. It's really concentrated. Tech seems to dominate. But then we had Rick Reeder on our air yesterday saying this is a great investing environment. Do you agree with that this is a good time to put money to work in the equity markets?
Short answer is yes. Look, the economy may be slowing. Recession risks, though, are low. We have a friendly Fed. We have slowing but positive earnings growth. So that's a message of stocks over bonds and cash. And as I said earlier, it's more of an environment for growth over value. So we want to be on the lookout for is if that narrative changes. And I think the labor market is probably the most important economic data point to watch. And then we want to see how this earnings environment is shaping up. So far this quarter, it's been fantastic. We've got lots of companies beating expectations, about 80%, which is the highest in a couple of years, really, since coming out of the pandemic shutdowns. So that's pretty much a good recipe for an equity market that while we are 3 years into this bull market, that's not the kind of behavior you tend to see when a bull market is coming to a close.
Yeah, speaking of bull markets and, something related to that, the bullish IPO coming up later today. What's your take just on the IPO market and just the capital markets in general? Is this IPO, is this a read on anything when it comes to investors, or is it just simply a company going public?
Well, so we're not allowed to comment on individual equities because of our compliance requirements. But what I'd say is that the IPO market has started to heat up this year. In general, it had been such a low level for quite some time. I wouldn't view it as overly optimistic. But if you start seeing a lot of this stuff happening, then that would be one of many signs of froth you would look for in the market. Overall sentiment is certainly a lot more optimistic than it was a couple of months ago, but we're not seeing the widespread euphoria that you see at the end of a bull market.